Hi, my name's Phil. I like talking about politics, and in this video, I'd like to contrast how the Bank of England were describing the problems of Brexit and how they seem to have changed their attitude markedly in the last few weeks. And there was a very interesting point made by the Deputy Governor, which would set an interesting challenge for Labour in government. But first, if you'd like to be notified of daily news and politics, please subscribe to the channel. So the Bank of England, just like any institution which is responsible for reporting on the economy, has spent the last few years describing issues caused by or made worse by Brexit. But in the case of the Bank of England, they've generally avoided using the term or been too explicit about the links. This seems to have changed now. First, we had the Governor of the Bank of England, Andrew Bailey, a couple of weeks ago, saying that Brexit had restricted the openness of the UK economy. A bit of a blow to so-called free market capitalists in the Conservative Party who created these conditions. And now we've had the Deputy Governor, Dave Ramsden, saying that Brexit has chilled investment. I mean, we've known this for some time. After increasing year on year, UK business investment immediately flatlined after the Brexit referendum. It's not that it went away completely, but the growth sort of disappeared. There was no need to wait to leave the single market for this impact to hit. Businesses make investment decisions for the medium to long term. And as far as they were concerned in 2016, we were going to be leaving the EU within a few years. And who knows what that meant? Certainly not businesses. The uncertainty of Brexit had British-based businesses, both domestic and foreign, holding off investment decisions for as long as they could. And in the end, many said they had to invest elsewhere. But the facts don't lie. Investment was showing a general trend upwards over time, and then it didn't, and hasn't really since. It's only just recovered back to pre-COVID levels. So investment could recover from COVID, albeit taking longer than other major economies to do so. But it has not recovered from Brexit after over 7 years since the referendum. And we can see this in the data. So we didn't need the Bank of England to tell us for information. We've already known and have known for some time. What is interesting is that the senior leadership of the Bank of England are not only directly linking Brexit with economic failures, but they're using the term quite explicitly. No need to read between the lines. It's clear that their coyness in the past has been linked to government pressure. So what's changed? Has the government pressure now gone? Is it the case that Rishi Sunak and Jeremy Hunt are not giving the impression that they want to waste time by leaning on people to not mention Brexit in connection with anything bad? Or is it just that they see the Tories' days are numbered and are getting ready for a slightly more open government on the issue? Ramsden pointed out that since 2016, investment in the UK has only gone up by 6% in real terms. And he said it had gone up by over 25% in the United States, for example. Now, I always like to compare us with the most similar economy to us, which is France, in terms of both size, in terms of geography, in terms of the things that affect us will generally affect France. France have seen an increase in investment of 18% in real terms. That's 3 times our increase in real terms investment. And Ramsden appeared to be highlighting the business uncertainty with flip-flopping of government policy. Ramsden said that certainty is a key driver of business investment decisions, and it has been lacking in the UK since 2016. And this is quite correct. So imagine you are a business owner or just a senior executive. You're preparing your 5 or 10-year business plan. And there's quite a lot you need to know. You know, what's your access to customers going to be like, access to staff, the legislative framework you'll be working in. All of these things have been up in the air since Brexit. In a functioning democracy, when legislation or regulations change in a way that will have a major impact, there's a transition period. The legislative body of that democracy will pass the laws, but they won't come online for you've got a period of time for adjustment. Might be 2 or 3 years if it's a really big change. But that's not what's been happening. The UK has not only been lurching from one policy to another at breakneck speed, but introducing legislation with no time to react. For example, just as a slight thing, like with HS2, lots of business plans were based on HS2. What did Rishi Sunak do? Did he say, we ought to have a review to see whether it's worth going ahead with it or not? He just said, no, we're just cancelling it. No consultation, no nothing. Just cancelling it. You know, if we take the Retained EU Law Act, for example, there's still a great deal of uncertainty about what that means for businesses. And it was passed in the summer. And it comes into effect at the end of this year. There's no time for businesses to adjust at all. They don't even know what it means. And this has been happening for years. We've had spin the wheel government for so long that it's really hard for a lot of businesses to be confident about their business plans. And it's not just about legislation. Everything else. Staffing, what's their access to staff? Well, we don't know. The government are now talking about raising the threshold, the salary threshold needed to get the points for a visa. Well, that's quite sudden. They're not saying to businesses, oh, in a few years we might do this. They're suggesting they might do it more quickly. Now, I don't know whether they will now that Braverman's been sacked, but the idea that could just happen really quickly for a business. Access to customers, same thing. We don't know. We still don't know. We've got positive signs that we might get an extension on the rules of origin requirements for electric cars, for example, so that we'll still be able to sell them to the EU tariff-free next year at least. But we don't know. It's not been formalised. Everything's just so unknown. And the other thing I would say, there's another aspect to this, not mentioned by the Bank of England leadership, that I will throw in here. It's not just that businesses consider the Tory government to be unpredictable, but it can't even have faith that the government will act in the interests of businesses. In other major economies, legislation is not passed to stifle valuable businesses. You may pass legislation to restrict bad business practices, but it will not hamper the growth of good ones. But the Tories have been using Brexit to just break up the UK for profit. Rishi Sunak recently announced his 5 new pledges. One of them was to back British businesses. Well, there's been no sign of this, because what British businesses want is certainty, and they want the government to reverse the various trade barriers blocking growth. That is what, whenever there's like a business lobby meeting, that is what comes out of it. We want certainty, and we want to reverse these trade barriers with the EU. Don't talk to us about the CPTPP. It's fine, whatever. We want you to tackle those trade barriers you have erected with the EU. Earlier this month, Bailey, the governor, said that we can't just do our own thing with financial rules because it makes us less compatible. It's made our economy less open, he said. When he delivered this statement a couple of weeks ago, he was clear. He was not making a judgment on whether Brexit was the right decision or not, similar to his deputy more recently, just that it had caused serious problems. And one thing that Ramsden, the deputy, did say, which was very interesting, he said the general opinion of the Bank of England, so not just his personal opinion of his colleagues as well, is that because of this weaker investment, the speed limit, he said, that the economy can grow at without triggering inflation is lower. Now, this makes sense, but this is the very first time I think I've really heard someone make this point in an official capacity. So imagine an economy growing quite strongly. That's generally a good thing. We like that. Now, although our economic model means that the very richest cream off the lion's share, it is still going to result in the workforce doing well out of it as well. More disposable income means you're spending on more things that you want but don't necessarily need. So inflation increases because people are spending more. What Ramsden is saying here is that our economy cannot actually grow by as much as it did without triggering higher levels of inflation. Now, this is a problem for Labour, but also another reason why they will have to tackle the realities of Brexit, even if they're not going to be completely open about it in public. See, Labour are promising, they're not just promising strong growth, they are promising the strongest growth in the G7, sustained. Yes, I know. But despite that curious competitive element to the claim, which I'm not really sure is needed, it is a fact that Labour always have to deliver strong growth. The Tories get away with a crap economy because people go, oh, they're imagine how bad it would be under Labour, because with the they take it as like this universal truth that the Tories are good with the economy. Therefore, if the economy is doing badly, it must be something else. Whereas Labour are not very good with the economy. So when something happens with the economy with Labour, it must be their fault. You know, that's just unfortunately the British psyche, fueled by the mainstream media. But Labour cannot get away with it. They have to deliver strong growth. But if Ramsden and his colleagues are correct, this is a problem for Labour. Now, being honest, delivering strong growth is already going to be difficult to achieve anyway. We've got no serious level of government investment at all. Like, name a thing. We haven't got anything, have we? What's Rishi Sunak talking about? Fixing potholes, something that's a matter for local councils. And there was no new investment announced by Hunt this week. But if Labour do get the economy moving again, Ramsden is basically saying that they're going to run into inflation problems sooner than would traditionally be the case. You don't have to grow the economy very much before you start to run into more inflation problems, is what he's saying. It means that if Labour do have a really good holistic view of things, and I very much hope they do, they will have to identify ways to reverse the elements of Brexit out of sheer necessity that are causing this proposed phenomenon alongside their efforts to stimulate economic growth. They'll have to run in parallel. Very interesting challenge for Labour. But the way the bank is now talking more openly about Brexit is also interesting. I wonder if we might start to see further openness and clarity of reporting in the news before long. But there we are. Those are my thoughts. Let me know yours in the comments below. I hope you found the video interesting. If you did, please click the like button if you'd like to support the channel further, the join button for memberships, and until next time, I'll see you later.